Tuesday, June 19th, 2018, Monaco 64, home of alternative economics and contrarian views. So yesterday I made a video about how a world of balanced trade would be the end of the fiat dollar or fiat money. And lo and behold, today we have a huge story developing. Zero Hedge reports U.S. futures plunge after Trump calls for $200 billion more in Chinese tariffs. Beijing vows to hit back. One thing I wanted to say, the $200 billion is not the amount of the tariff. It's on $200 billion worth of Chinese imports or exports, to the U.S. Trump said he wants to put a 10% tariff on those goods. So it would actually be a 20 billion, tariff because it's on 200 billion worth of goods. So what did Trump actually say yesterday night? He said, further action must be taken to encourage China to change its unfair practices, open its market to the United States goods, and accept more balanced trade relationship with the United States, Trump said in a statement. So what did the Chinese say? So China says to hit back if U.S. rolls out new tariff list. So the new list on 200 billion. I think the U.S. already has a list on 50 billion worth of goods. China MOFCOM says U.S. tariff decision against market rules. China will take strong countermeasures if U.S. issues new list. China Commerce Ministry says if U.S. publishes additional import tariffs list, China will have to adopt comprehensive measures to fight back firmly. China Commerce Ministry says the U.S. threats on 200 billion tariffs list disobeys negotiations and consensus reached previously between the two countries. So before I go further into the trade war and also the other side of the coin that I'm sure President Trump knows about and his advisors know about, the fact, in Triffin's dilemma or paradox, whatever you want to call it, the fact that the U.S. has that exorbitant privilege to basically buy anything abroad with printed money, while other countries have to earn dollars to buy things abroad. So, but before we go there, let's just quickly look at what the markets are doing. So it's 8:10 a.m. London time. Spot gold is up $2.60 at 1281. So gold is holding on here. The range has been 1276 to 1284. Silver is down 7 at 1638. I guess silver's underperforming because a lot of the other assets, non-monetary assets like gold are down today because a trade war won't help the economy anywhere, I guess. And silver is a bit of a industrial metal and a monetary metal. So the Dow right now is at 24,568. That's down 420 points. It might sound a lot, but it's only 1.68%. We're right near the lows here. The S&P is down 40 points, 2734. That's 1.4%. So yeah, the stock markets are down just over a percent. It looks like a big drop, but only because, we're at 24,000 instead of 12,000 or 10,000 or 17,000, right? The NASDAQ is down 106 points, 1.5% at 7142, NASDAQ 100 future. Currencies, well, the dollar is doing well this morning, but not against the yen. So the dollar is down about 0.8% against the yen at 109.65. It's down 88 pips. And at 109.65, it's down 88 pips. Maybe President Trump doesn't realize that, and I'm not having a go at him, but what will happen if countries don't have as big a reserves of dollars? They won't be able to, how can I say, not launder, but recycle that through into treasuries to buy treasuries to keep interest rates low. They won't need as much dollars, you know, and that's what I think is happening also to the dollar against the yen. Plus, it's also the carry trade currency. So if risk assets are going down like the stock markets, there will be short covering people who are short yen to finance speculation. That's the other point. So the pound is down 1/3% at 132.04, right near the lows. The euro is down 50 pips or 0.42% at 115.74. So yeah, the dollar's done well against the European currencies, but is not doing well against the yen. And that's probably why gold's holding here. Of course, gold should be a lot higher. Maybe that smackdown of gold and silver on Friday was because the people in charge, you know, the Federal Reserve, the Treasury, they knew this was coming, this talk of more tariffs, and gold could probably be making new highs here if they hadn't manipulated it on Friday. So that's what's going on in the markets right now. I said the fact that if the U.S. doesn't have as big a trade deficit, foreigners won't have to recycle their dollars into treasuries as much. But nevertheless, treasury yields are down today. They're at 286, down 6 basis points. I personally think in the longer term, this could be bad for U.S. finances, actually. But let's talk a little bit about, you know, this trade war. Yesterday I made a video talking about this Triffin dilemma or paradox, that the country who runs or has the fiat global reserve currency, other countries try to earn as much of that fiat currency as possible so they can function in international trade and commerce, because only the dollar is accepted as a currency, as a fiat currency. So they have to try to do better than U.S. companies and U.S. businesses, U.S. Anything, to try to earn more than they take, you know, more than they buy. They actually have to try to make a profit, so to speak. The U.S., of course, it's come to a point where the deficits are just growing too large. And I'm sure the President Trump and his advisors, the economic advisors, know that about Triffin's dilemma and paradox. They know that the U.S. is headed easy in terms of like being able to finance its foreign trade with printed money. But what that has done to the U.S. economy is it's hollowed out the middle class, it's hollowed out industry, it's hollowed out businesses. And who's benefited from that? Well, it's the globalists, the big multinational corporations. They've benefited from it because they don't care if they move a plant abroad or if they keep it in the U.S. or and bring it back, take it back. As long as they're able to operate in a worldwide scale, they don't care if they produce things in the United States. And I think, I suspect that's what Trump's trying to do, is rebalance that. We've had like almost 50 years of this sucking sound, you know, of all the production leaving the United States. And I would blame the people who ran down the Bretton Woods system, the gold standard. You have to start blaming, I guess, even, I don't know, Kennedy, Johnson, Nixon especially. This is the consequence of closing the gold window in 1974. And he did say it was temporary. So maybe after, how long is it now? 47 years. Maybe Trump will stop that. But yeah, it's a weird situation, but I think this could be for real now. This is definitely it's definitely gonna do something to the system. People are gonna have to, you know, other countries are gonna have to depend on other currencies And that's one of the reasons why I think, you know, the yuan is going to be important, the One Belt, One Road, the fact that they've opened the yuan oil futures contract, the LME looking to trade also in the yuan. Maybe the Chinese have been playing this all along. They've known that Trump is going to do that. Maybe all the tit for tat is just for show, for public consumption, and they're working something behind the scenes that we don't know. It's strange because right now the U.S. needs as much as possible for foreigners to buy treasuries, especially with the huge deficits that it's running, the huge debt that it's running. You would think that they wouldn't want to rock the boat and kind of piss off foreigners. I mean, we saw that Russia already sold 46 billion of its treasuries in April, and look what that did to interest rates. So what if the Chinese decide to start selling treasuries? That could be a big problem for interest rates and the Fed and the Treasury for its financing, for rolling its ever-increasing debt. So yeah, that's the big story today. It looks like trade wars trade war has definitely been declared by Trump. Some people say trade wars develop into hot wars. Let's hope not. Let's hope this is just something more financial, and we don't get into a real hot war or a kinetic war, if you want to call it. So yeah, it'll be very interesting to see what happens later on in the day. I know it's early days. Usually the U.S. comes in, things change. You could see the Dow be up 200 at the end of the day. Who knows? The PPT or the Exchange Stabilization Fund, they could throw everything at it, and we could see everything turn around. But at the moment, it doesn't look good. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can follow me on Steemit, DTube, and on Twitter as well. If you'd like to make a donation to the channel, there's some links below in the description. I'll talk to you later. Take care. Bye.